We provide software, we provide data solutions, we provide consulting and support solutions. And that provides us with access to unique data, to unique platforms, to unique customer interactions. We use that unique data to create what we call only on domain experiences. And that only on domain experiences provides, the 6.5 million Australians who come to us each month with a reason to come back, because you can find things that you can only find on domain.
Hello everyone, and welcome to a new episode of Conversation with Leaders. My name is Josh Gilbert, a market analyst at eToro, and I'm happy to be your host today. Before we start, a quick reminder to like, comment and subscribe to the channel to continue seeing these interviews. Today we're joined by Jason Pellegrino, CEO of Domain Group. Jason joined Domain as Managing Director and CEO in August 2018. He was previously Google's Managing Director in Australia and New Zealand and a member of Google's Asia Pacific Regional Leadership Team. Since taking over leadership of Domain, Jason has overseen its listing on the ASX and scaled Domain from a real estate marketing business to a property marketplace. Jason, thank you very much for joining us today. How are you doing first and foremost?
Fantastic. Thanks for having me.
It's a pleasure. It's great to have you with us. Jason, I mentioned a little bit there about your time at Google. So again, you went from a tech giant in Google to then running Domain in what is Australia's most loved sector. Tell me firstly why Domain, and also how you found running the business in the last 6 years.
Look, it was quite an easy decision. It's an Australian-based technology powerhouse in a sector that matters. When you're talking at family barbecues or conferences across the country, property is a sector is of interest to everyone in the country. It means so much. It's Australia bats well above its weight in the importance of residential property to everyone's wealth, to the prosperity of our country. So 450% of GDP is the total value of residential property in Australia. It's 10% or 2/3 of people's household wealth. And to be able to lead a business with the privilege of bringing digitisation and technology, and particularly more recently, artificial intelligence, into a sector that matters so much, was a real privilege.
Yeah, absolutely. And as you say, sort of it is that conversation that maybe dominates a family barbecue, and it's been, Domain itself is pivotal in sort of connecting Australians with their dream homes. As we said, almost an obsession for most Australians. So for maybe people that aren't fully aware with Domain as a group, we are obviously an international business with investors all over the globe. Tell us a little bit about the story behind Domain Group and the business model, if you don't mind.
Yeah, so we're a diversified property technology business. So we have the privilege of 6.5 million Australians coming to Domain or one of our platforms each month to look at buying, selling, renting, leasing, or just really understanding trends around their property interests. We use a lot of the data that comes through those interactions to provide that information back to consumers. We connect consumers with a range of different participants, whether that's agents, and we have relationships with the vast majority of the 10,000 plus agency offices across the country, 40,000 agents. We have extensive relationships with government. We are the largest provider of land valuation technology to governments across Australia. In fact, we do about 50% of all land holdings in the country are valued by Domain or Domain's technologies with regards to land tax rates. We help local councils and governments understand the use of land, which is their single biggest asset. We work with banks and financial institutions. Our valuation technologies are used by all of the 4 big banks in Australia and a large number of tier 2 banks. And we connect with a range of other enterprise customers, whether that's insurers or media advertisers looking to sort of understand more about their customer base. And so we have a very diversified business, but at its core, it's a core listings business, and the listings business really drives a significant proportion of our overall economics. It's around about 80% of our revenues are driven by our listings business. And we then have a second division of ancillary businesses that go out to enterprise customers or agent customers. We provide software, we provide data solutions, we provide consulting and support solutions. And that provides us with access to unique data, to unique platforms, to unique customer interactions. We use that unique data to create what we call only on domain experiences. And that only on domain experiences provides, the 6.5 million Australians who come to us each month with a reason to come back, because you can find things that you can only find on domain. And what we've built there is effectively a flywheel, where our marketplace strategy of a core listings business supported by a range of ancillary businesses providing access to unique data and unique revenue streams, unique customer interactions, provides only on domain experiences and draws more people back. And so we have created at its core a technology business that's built upon data.
Yeah, absolutely. And obviously you mentioned there about the use cases for the business. I can actually be, a servant of the app itself, recently just moving into a new apartment after window shopping for many, many months, as a lot of Australians do. You also mentioned as well, Jason, there about your sort of unique audience that grew by 10% this year from your full year results. And I think it's really important to understand the growth potential of Domain for investors. Firstly, how do you think investors should view that current standing? You're around I think it was 6.9 million unique users in the full year result. I'd also love to get a little bit of insight on how you're sort of targeting the addressable market and what addressable market you're looking at right now.
Yeah, so we definitely have close to 7 million Australians. We have slightly more if you include our print products across non-digital channels. And that's a very unique audience in print. It's not this old aged channel that is not useful. Actually, it generates significant interest for people selling their homes of what we call a passive audience. These are audiences that are not actively looking and searching like you were, but might come across something of interest and decide to actually initiate a move or an investment or something along those lines. What we do is we target and provide solutions and we're focused on all Australians. Our core mission is to inspire confidence in all of life's property decisions. But we do know that those decisions aren't as frequent as, say, some of your browsing habits. So the average Australian moves properties or buys and sells a property every 10 years. We want to be there for that point in time. But we also want to be there within that time as we're helping them understand what they could possibly do. Maybe it's not move or sell or buy, but it might be improve. It might be, increase capital value. It might be invest. And so we're there throughout that time. But what that means is our audience is really, really diverse. Yes, there are nearly 7 million Australians each month that come to us, but there's only 150,000 Australians each month that are actively inquiring on buying and selling a property. And so we are very, very focused in how we engage with our audience. And our audience is a mix of a small number of high intent, very, very valuable users, of which we have the vast majority across the country on the Domain platform. And we're engaging with them, and we're using our data and insights to provide them with personalised services, personalised recommendations, and hopefully helping that high intent process be more effective and efficient. You would have gone through the emotional drain of how difficult it is to find that perfect property and how difficult it is to secure that property, and the emotion of waiting for a response from an agent. And we're trying our best to actually make that process as easy as possible. At the same time, there are millions of Australians who really just want to understand the trends in their local suburb or their local markets. There are millions of Australians who want to know where celebrities are living and what they're doing. And so we're sort of engaged across the entire property ecosystem, from someone who's on our platforms 10, 20, 30 times a day trying to find that property to buy or rent, through to people who might just be browsing a piece of content around trends or high value property purchases or transactions. So we sort of cover the entire gamut of property within Australia.
Yeah, I think I have too many sort of high value properties watch list on my Domain app, which seems probably a little bit unrealistic for now, but it's always good to have a goal.
We're happy to support aspiration. I'm the same. It's fun. It's fun to read. It's part of the Australian psyche. Like I spent a number of years overseas. My wife's British, and one of her incredible observations is when you sort of come to Australia and you turn up to that first barbecue. It's quite shocking to be involved in some of the conversations in Australia that are fully accepted. Like, where do you live? How much did you pay for your house? And then someone professing an opinion as to whether you paid too much or too little. Those conversations don't happen anywhere else in the world. Yet it is so ingrained and part of the Australian psyche. And that's why a business like Domain is sort of at the core of so many people's sort of habits in terms of content, because property's right at the centre there.
Yeah, absolutely. Jason, we spoke a little bit there about those full-year results. I just wanted to ask you and to sort of maybe give our listeners a bit of insight into those. What were the highlights from those full-year results? It was another robust result, but if you could give us some of the highlights from those numbers.
Yeah, really strong growth. 13% growth in revenue, 27% growth in profit. It's really strong performance in Sydney and Melbourne. But across the rest of the country, Queensland, for example, is probably experiencing some of the worst market conditions that we've seen in many years. And that's just a cycle. It's starting to improve. It's following the trajectory of Sydney and Melbourne, but it really did bottom out in that last year. And despite that, we saw strong growth in that market. So it's really a point to the resilience of the business. If I look at the last 6 years, we really have had 3 once-in-a-generation market disruptions. And I say once in a generation with a smirk because it's every second year was a once in a generation. We've had the Royal Commission impact that essentially stopped lending for 3 to 6 months. We had COVID, had a remarkable impact both in terms of slowing everything down and then fundamentally accelerating people's desire to reimagine what a home looked like. And then thirdly, in the last, in FY23, a dramatic slowdown brought about by fast raising interest rates. And these are 3 things that haven't happened frequently before, and they happen. And yet the Domain business has chugged along and grown consistently. If I look at the last 5 to 6 years, our average revenue per listing has grown around 11% on a cumulative basis each year. And that just shows a very, very resilient business. Yes, we do accelerate. We see results like we did last year in improving markets. But even in poor markets, our growth does slow down, but we still drive growth. So it's a very resilient business, and it's a business that has a lot of potential going forward. We see so many more problems that we can provide solutions for, whether they are for consumers across Australia or our enterprise customers or our agents. Property is probably the least impacted industry across all industries in terms of digital disruption. It is still the industry that hasn't had the full impact of digitisation. Even this morning, in one of my work capacities, having to sign a lease for a new extension of our office in Australia, having to bring in my passport to do a physical signature with a lawyer that came in. That doesn't happen in other industries. Like I can book a round the world holiday for multiple months in different countries and do it all from a couple strokes of my keyboard. I can have groceries delivered this afternoon. I can order a car and have it here in 3 weeks. And yet I'm having to actually bring a passport in so someone can cite it and physically sign for a lease on a property. So there is so much potential ahead, and Domain's at the forefront of that, of digitising the property transaction to make it more efficient, to make it more usable, so that we can bring some of the experiences that people have felt, the digitisation of media, Netflix coming in and sort of, making TV guides a thing of the past because I watch what I want when I want. We want to see those similar experiences starting to come into the property market.
Absolutely. And obviously you mentioned their revenue and profit growth, solid numbers. I wanted just to sort of touch on just one challenge that I think I have noticed in the results, and we saw a slight slowdown in the agent solutions segment. And I just wanted to ask you sort of what you thought that was from. Yeah. That is obviously a challenge in some cases, and maybe how investors should interpret that.
So one of the real advantages that Domain has is the scale of our business. So we have a relationship with every agent across the country largely, and we do annual deals with these agents, and there's only probably 2 companies in Australia, us and our major competitor, who are able to do that. And so we will sit down with each agent or agency and talk about the next 12 months, and we'll do a sort of a 12-month contract. That's called a depth contract. What that means is they are signing up to use our products over the next 12 months, and then every listing that comes onto their platform for the next 12 months will be processed through a certain tier of listings. Now, our most premium price products get all of the service and all of the ability. They get the widest range of views, the widest scope of engagement with audience. We extend those products off our platform into a range of social media platforms. And that's fantastic. Now, in a market downturn, we do see listing volumes come off, but those agents are still sort of contracted, and we still work with them because they see the value in our product. And so we get the listing downturn, but we don't see them sort of turning away from our products. And that's never happened in the last 6 years. Each year, we've had more and more agents moving up to more and more premium tiers. However, We have in our agent solutions business, we have a business we recently acquired called Wheelbase that has a social media extension product. It's a product that they sell that basically goes out and takes these listings onto social media platforms and then drives traffic back to the agent website. That is not subject to these annual commitments. It's a one-off transaction. And in the last 12 months, we saw a radical decline in the sales of that product because when pressure is from cost of living and sort of poor listing environments, such as we saw in Queensland, agents are making the choice to actually drop that off the schedule to reduce the marketing budgets to compete. You have the same number of agents, for example, in Queensland, competing for 30% less listings, so there's a lot of competition that goes through. So what we've seen is that the agent solutions revenue line was impacted by that. Now, going forward, we've actually, from the 1st of July, bundled that product into our annual contracts, and so that will resolve that issue, and we won't see that repeated going forward. It was part of our acquisition plans was to actually bundle that, and we got that done on the 1st of July. And you'll see the rest of that agent solutions business, so excluding that listings product that declined, the rest of the agent solutions business actually had quite strong growth. So from our digitisation workflow products like Real-Time Agent that had a 37% growth year on year, to a very mature product like Price Finder that is one of the leading products in the market to help agents understand historical values and appraise a property. So when they're in the living room of a vendor, giving them an opinion of what it's worth and what it will sell for, they use Price Finder. And that's a significant, major player in that market. And we saw sort of single-digit growth in that very mature product. So Agent Solutions as a software business is growing if you exclude that listings product, and it'll grow. Going forward, the growth will sort of be back to what we expect to be double-digit growth through the cycle. Once now that we've actually sort of dealt with packaging and bundling that listings product with our other listing offerings.
Yeah, fantastic. And I want to just point out, a couple of things you mentioned there as well. Firstly, competition, and then secondly, we spoke a little bit about sort of the digital movement of the sort of real estate space. Combining the both, how is Domain sort of differentiating itself from competitors in what is an increasing digital space and, with competition pretty fierce?
Yeah, look, and that goes to the core of our marketplace strategy. So when I think about taking our core listings business, getting access to unique data, unique insights, unique and exclusive opportunities with customers and customer bases in our ancillary businesses, that's all to create only on Domain experiences. So that is something that when you come to Domain, you can't get anywhere else, and it's to provide differentiation and exclusivity. So a great example of that is for our agent customers is what we've done in the last year to launch what we call Audience Boost. So we're the only portal in the country where every time you put a listing on the Domain portal, we actually take that listing and automatically, for all of our depth listings, not just for a few, push that listing out to a range of digital media platforms out there. Because we recognise that not everyone is on the Domain platform every single day. And so we'll take your listing, if you're a landlord or a vendor, and put it out to the Meta platforms, onto Google, onto a range of display networks, across to Nine, for example, our sort of major shareholder in their media network, and go and look for potential buyers or renters that can actually add value to their vendor. And so that's something that a vendor or an agent it can't get from other providers in the market.
Yeah, fantastic. And I think it would be difficult to sort of really have a conversation today without talking about rates and what may potentially be rate cuts on the horizon. High interest rates have continued to challenge the property market over the last sort of couple of years, and we're maybe getting to the end of that cycle, yet to be seen, but potentially. What are you seeing in the market right now when it comes to rates? How have you seen that affecting the market, and how are Domain itself navigating what are pretty difficult challenges?
So we have a very extensive economics and research group within the Domain group, and we report and publish a lot of research on that. Our view is we are at the top of the cycle. There may be 25 basis points. We don't think that will be the case, and we'll enter into a rate decline period likely early in the new year. That's probably the market consensus view. Look, if I went back 18 months, Australians were essentially paused a lot of their thinking around property, whether it was to sell or to buy it or rent or lease, and everything paused. And the reason it paused is the rate of incline of interest rates was so aggressive, and specifically, there was not a lot of commentary providing any confidence as to where the endpoint would be. And so I remember, I think it was the first Tuesday of February 2023, where RBA came out and increased 25 basis points. It wasn't the first, it wasn't the last, it was sort of in the middle of that trend. And overnight, we saw 20% of listings in that next week that we typically get disappear. And that's a huge impact. And the reason being, people were really scared. They didn't know whether in 12 months' time their interest rate would start with a 5, a 6 or a 7 in front of it. And particularly when some of the market commentary and the RBA's notes themselves came out and said, we don't know whether these interest rate rises are working, and we don't know how far we have to go. And your average Australian sits there and goes, well, if you don't know, how am I meant to know? And so that caused an enormous market dislocation, and people stopped. Right now, whilst interest rates are high on historical levels and are likely to decline, it's more about people understanding what the forward projections look like, and they know that they're not looking at another 100 basis points of increase, and so they can budget. So people are getting back to actually their normal transactions. You have to realise that the vast majority of property transactions, over 80%, typically over 85%, are not investors. They are people looking to own, to sell, to trade up or trade down their family homes. And that happens because of demographics, births, deaths, marriages, divorces. They slow down and speed that up based upon some dynamics around them, but they can't change. Then, if you are a couple with one child and a second on the way, you need that extra bedroom. Now, you might be able to delay that for 6 months, but you can't delay it forever. And so that's what happens. Right now, we're in a period of relative normality where the market has actually rebalanced back. You're seeing really strong demand across the country. There's a little bit of catch-up on pausing that's happened in the last 18 months. You're seeing supply start to come back and rebalance. And so we're probably at that very sort of neutral average supply-demand balance across most parts of the country, particularly New South Wales and Victoria. Queensland's now moving fast into balance. It had been in a significant listing supply deficit, and those listings are starting to come back. You're seeing that in Queensland with rapidly increasing pricing, which is something we saw 18 months ago in Sydney. Rapidly increasing pricing always precedes listing volumes coming back.
Yeah. And as you say, in your period during, as CEO, you've obviously gone through that pandemic era,
Absolutely.
sort of interest rates at zero, then sort of rates, moving higher quite rapidly. So sort of two completely separate ends of the scale. And I think that maybe talks to how much property does evolve over the years. And as you said earlier, the sort of the digitalisation of the space. And I'd like to maybe get your input on sort of what you see as maybe one of the biggest trends or one of the biggest changes that you're seeing in the Australian property market, and then how Domain is innovating itself to then stay up with those trends.
Yeah, so people are using the digital tools that are being evolved rapidly. So last year we innovate every year, but last year one of the big things we did was just a dramatic update in, for example, our user app, where we brought maps front and centre. And that might sound like a small thing. There's Maps, and Google Maps has been around for many years, but not in the classified space. So our classifieds listings, which is a list essentially that goes through, essentially is in the same format as what print ads used to be. You'd have a list by suburb and you'd work through. Now, the reality is property is all about geography. So people were going backwards and forwards and looking at a list and then looking at a map and then coming backwards and forwards. What we've done is actually brought the map to the foreground because we saw that was a preference of consumer behaviour. And then we've dealt with a number of the technology challenges that requires. So why haven't others gone there? Well, it takes a huge technology investment in making that map-based experience as seamless and quick and easy as the classifieds. It actually does challenge the economic model. So we have different tiers of products that we sell, and in a listings environment, they are tailored and built for that. So you get more traffic at more premium sort of locations on a listings platform. In a maps experience, you actually have to reinvent that, and we've done that. And so we're not afraid to take risks, and we're not afraid to focus on what consumers want. We've seen really strong sort of feedback and people engaging with that maps experience. They are looking at more properties. They are exploring properties outside of some of their search criteria. So they might be searching for a specific suburb, but on a map they realise that the perfect house just sits 2 streets across from that suburb. and they're finding that property more effectively through our maps-based experience than they are in a listings experience.
Yeah, and it must have worked. I actually use the map tool. I'm more of a mapper than I am a lister. So
Yeah,
whether...
I think that's a great example of technology evolving to a point where we can better match and meet customer preferences and experiences, rather than getting the customer or the user to sort of come onto our way of doing business. We're able to move forward and meet them with their needs.
Yeah, absolutely. Jason, you mentioned right at the top of the episode a little bit about AI, and I think it would be pretty hard not to go through this when you're obviously a very online business without talking about that. How do you implement it, and where do you see some of the biggest contributions of AI to Domain's business, given how it has just sort of really taken over within the last 12 to 18 months?
We've seen extensive investment in artificial intelligence over several years. So if I go back 6 years when I first joined, we're probably the largest data science group that I've seen of a business our scale, and we've continued to invest, and that has resulted in the development of a number of AI solutions. So we have several within our business that we're using actively every day to drive efficiency and effectiveness. Our journalists have access to AI tools to help them write stories that are data-based and research-based much more effectively. So they can query our broad range of data and economic research and create a story effectively without having to do a lot of the legwork required to graph or create or find that sort of data set. We've used it to efficiently drive customer service improvements, to drive listing performance improvements. We've changed over 1.5 million listings that have hit our site over the last 6 years, have been updated, have been improved, or suggestions have gone back to agents to improve a listing to get better outcomes based on these AI tools. So that's huge. 1.5 million of these have been improved automatically because of AI. Forward looking, actually the most exciting thing for me is understanding all the data points we have and being able to predict future behaviours. So we're actually getting really good at sort of understanding future trends of properties coming to market. And that's from not only sort of the data points we have, but also our engagement with government, our engagement with banks and financial institutions, of understanding the entire property ecosystem using AI as a predictive tool. And that predictive tool helps banks, for example, in terms of understanding how do they engage better with their customer base. If you've got millions and millions of loan mortgage holders, you can't talk to each one of them on a daily basis, but if you can have a good sense of which ones are more likely to be wanting support and services to upgrade, to sell, to buy, we can help banks improve their customer service dramatically and help those bank customers receive dramatically different customer service. With agents, it's the same thing. Agents are sitting on an extraordinary amount of data. Unfortunately, that data is static and, in fact, increasingly dangerous. It's the security protocols, the accessibility, some of this, personally identifiable information or security information. We can actually help them sort of bring that into a much more secure environment and turn that data into insights. Instead of just a database of old phone numbers, is how do we actually figure out what's the right way that an agent should engage with potential vendors or potential buyers. And so we're using AI really extensively across our business to improve efficiency, to reduce business operating costs, but also to create future revenue opportunities for our business.
Yeah, and it sounds like it is already having a big impact on the business and will continue to do so. Jason, last but not least, we're obviously an investment platform, so I want to talk a little bit for investors here. What would you suggest for new and current investors to sort of track and to keep an eye on when analysing Domain's fundamentals moving forward?
I think have a look at the growth profile of this business. This is a business that has delivered 10% revenue growth consistently over the last 6-year period. There has been fluctuation because of these market dislocations, but they are abnormal. But even through that, double-digit revenue growth, significant profit growth above that, and delivering EBITDA margins of 35% plus. So if you were to look across and do your market scans, businesses that are delivering double-digit revenue growth with 30+% EBITDA margins and defensibility and moats around that sort of business, it's a very attractive business. We need to continue to innovate, continue to develop, continue to grow, and they will be the market cards that we're putting down as a leadership team, and we will continue to deliver over the next few years.
Jason, thank you very much for that. It's been a pleasure to have you on today. Thank you so much for joining us.
Perfect.
To stay up to date with everything on Domain, there will be a link in the bio to view the business on eToro. And to make sure you stay informed on markets, head over to the eToro Academy and stay tuned into Conversation with the Leaders to get the latest from the experts. Click subscribe and don't miss a beat. Thanks for watching and see you next time.
Thank you.